Welcome. These are your options trades to watch for the week. This is your broad scale market analysis, and this is your Bible for how you're going to trade this week because there are some big economic announcements coming up that you do need to be aware of, especially when it comes to hedging your portfolio to the downside. Because I'll tell you right now, there's definitely an opportunity for downside on the table. We need to be very mindful and very aware of how we trade and treat this week. This is the optimal week to have a heavy cash position ready to fire for when the opportunity comes. We're going to start on the S&P here. We've had a mixed bag this week. We are basically coming down to about 433. We've popped back up just ever so slightly on the daily. We had a decent amount of buyers flood in, but again, RSI coming down as low as 34, almost touching into what I'd consider oversold. We're at a very critical tipping point right now. With what we have on the S&P right now, I have about 435.5 marked on my chart as our make or break pivot point. If we can hold here, then we should see continued upside. If we cannot hold here, we're going to see more downside. So my first target to the downside, which I do believe to be probably our most likely scenario, if these economic announcements do not come out extremely favorable for basically avoidance of a recession, strong economy, lower inflation, yada, yada, yada. If we cannot hold here at what we've got marked right here, if you look on the chart, remember, always screenshot this, watch it, write it down on a sticky note, stick it to your face. I don't care. You just need to know these price levels. We have 435.5 right here. We need that to hold as support. If it does not, then we are very likely to see a sell-off down to at least, I would say, 431. So we're going to put another red. We're going to move these down because they're kind of irrelevant up there right now. We'll change the color to red. So this is kind of our disaster scenario. This is we don't hold here. This is probably where we're going, which means I would either go short, buy puts. That's what I'll be doing if we can't hold 435.5. If we fail to hold there, well, then that's an even worse situation. But I would say that we have 425 waiting for us on the downside. So to summarize that, today is going to be quick. If we don't hold 435.5, we continue bearish to the downside. So we try, we fail, we're going to go here. If we can't hold 431 and change, we're going to probably come down as low as 425, which means over a month's time, targeting 425 would not be a terrible idea. In the short term, I would target between 431 and 433 because, again, if you're trading options, you want to make sure that you have the opportunity for those options to go into the money. That means that you'll see max gain on those contracts. So keep that in mind as you're watching the S&P. Remember, this is basically going to guide us on the overall market. We are going to see some more tech sell-off if these announcements are not favorable. We have NVDA propping up the entire market right now, which is the next one we're going to look at. But overall for the S&P, I am mostly heading towards a bearish strategy. Again, if we hold 435.5, then there is the opportunity that we hold here and we push up to maybe 438 to 440. If we cannot hold here, then we are coming down to 431 and then eventually to 425. So let's take a quick look at NVIDIA right now, propping up the entire market, pushing against resistance here. So we bounced off support at 405.5. We are holding up right now. We tested as low as 417, and now we're pushing up off resistance at about 457. Remember, they are posting earnings on Wednesday, and earnings can go either way. I'm not a big fan of trading those variable outcome scenarios. So please tread carefully and trade that one safe because earnings may be good, they may be favorable, but the most recent earnings, I think, priced in 2 or 3 favorable earnings in the future, which means that you might not see that much upside. The implied volatility will diminish, and those option contracts, even if they're close to the money, could lose significantly in value. Now, I am not saying I'm trading downside to NVIDIA. I'm just saying the opportunity to trade earnings was last earnings. This would be a safer equity play, in my opinion. After a strong push today, I have hedged my position just to be safe. So that's NVIDIA for you. If we do break up, I do think we could retest the 470s again, above 480 and change. We're going to probably head to 500. If we don't push up any further here, we're going to probably consolidate between 450 and 405. I think that seems like a realistic scenario. Moving on to Tesla. Remember, we had outlined this box here. We took a great trade all the way from about 250 to almost 300 bucks. The first time we took this from about 115 to 300 bucks. So double your money, double your fun. That's great. We were trading just above that 200-day after a sell-off down to 212. I think if Tesla can break up above 230 and hold there, you're going to see more upside. If it doesn't, I think we're going to probably see some sideways consolidated trading. So there's not much to do here on the options front, in my opinion. Looking at AMD, second cousin to NVIDIA, somewhat of a similar chart, but not exactly. This thing came down and tested off 102, and now it's pushed up to about 107.17. So strong push up, but it has to hold over 102. I think if we can stay in this range and then test 113, we're going to see more upside. Above 113, very bullish. I think we'll see more upside going forward. I'm looking at then the Qs, just your average measure of the technology sector at large. Similar chart here. We've pushed down as low as about 355. We're trading in between this channel here at about 359 to 364. What we need to see is a push up above 364 and then above 368, and then we'll be bullish to the upside. If we don't, then we're probably going to come down and test previous resistance. You can see this line right here is previous resistance. I think we'll come down and test that as support. That's around, anywhere between 350 and 360, I think is realistic. If it doesn't hold there, then this 200 EMA is the final support that will need to hold on a support touch, which would put us at around 330 to 340. So that's the Qs for you. And then last but not least, Apple, huge sell-off, but has pushed up. Didn't even touch the 200-day. I do like this consolidation channel right here, pretty much between 170 and 173, give or take. I think that it's probably going to trade and consolidate in that area for a little bit before inevitably pushing above 178, which is our line right here. Once it's above there, then we have the opportunity to retest that gap at 190, which would be huge for the bulls, but I don't see that coming today or tomorrow. And again, wait for those economic announcements. So here we have BABA. We got the breakout. We failed, came back down. We did find support on the consolidation area that we did mark right at about 87 bucks. We need this to break above this thick blue line right here. That's our indicated resistance. We have to see strong bullish price action above there to see continuation and hopefully retest the 100s before inevitably testing 120. If we don't, then we're probably just going to keep consolidating here for a little while. I do think this one's undervalued. When it was trading around 70 to 80 bucks, I do think that's cheap, and it is good pickup there, and I have been buying there. But if we don't see that move up, this thing's probably just going to follow the rest of tech and just kind of bleed off into oblivion. By request, I know a lot of you were interested in AFRM and you wanted to take a quick look because we were trading that at some point. We did map this trade out, and unfortunately right now it isn't playing out exactly as we had hoped, but it is trending exactly in the consolidation range we identified. Remember, we talked about bottom at $14.50, top at $31. Our main roadblock or obstacle here is 1739 price resistance. That's our 200-day EMA. As you can see, it's swooping down, and it has been resistance time and time again. However, we have found support right at about 1350. And as long as we hold there, I'm still very bullish on this one to the upside. I think this is going to be a great trade in the long term. I'm holding equity here. We're scouting for some options plays right now, given that we had one that ran for profit twice over, I think, 60%, and then it came back down to entry and then sold off. So we're gonna reevaluate the position there. But as of now, as long as we hold 1450, we should be in good shape. Another one that I know is by request, VALE. I think very bearish here. If we can't hold 1224, this one's going to be a hard pass to the downside. I think realistically, we're going to probably come as low as 1176. If that happens, then I think this is one you just hold and want. You don't buy. I'm not buying. I'm just saying hold, watch, wait, see if there's opportunity to buy, but I don't see it right there right now. And last but not least, United Airlines, nice trend support bounce here. We are holding this one still to continuation. We've seen huge runs up, had a huge profit on the tables. It was a big money maker. One of my favorite trades because of how easy it was to navigate and how short and simple it was, yielding great profit in such a short time. We've got a nice trend support here. We've been bouncing along it. As long as we hold here, again, wait for this to test support. As long as we hold along this support here, we're in solid shape for a longer term play here on continuation. Airlines got beat down. We bought right at the bottom. This has been a great trade so far. On the weekly, important to go to these larger time frames. We are just below that 200-day EMA. We want to see breakout above there, and then we want to fill this gap all the way to 74 bucks. I think if we do hold above the 200-day EMA, which right now is about $50, if we can hold above there on the weekly and close above there on the weekly, then we're going to be in great shape. If you look here, what gives me confidence that we'll see continuation here is going to the monthly chart again, much bigger scope. We're trading above the 200-day right along our trend line, so we're in great shape. Again, the goal is that we want to see this fill this gap, but we want to trade it smart. If we don't get the run we need, then we need to cut bait. But I don't see that happening with the way the chart is right now. I think we're holding here. We need to continue to hold. And then before we know it, we should be blasting off to test at least $70 with our longer term target being 77. This one should be a huge money maker for everybody. I really hope that it's a trade you followed along with and are set up for to profit from and make some money on. So again, sorry for the short one. I have some sad news I have to deal with one of my pets. So I'm going to go ahead and deal with that. I just didn't want to leave you guys high and dry. So I love you. Stay blessed now. Trade smart.